Hello there. Welcome back to grade 10 accounting. We want to look at a question from June 2022. We're going to look at question 2 on that question paper. That is June 2022. And this question is on debtors reconciliation and internal control. So this question that we have, remember our question has got 27 marks, and it requires you on average to spend about 24 minutes on that question. And the question reads, the following information was extracted from the accounting records of Shelejuba dealers for June 2022. At the end of the month, the debtors control account and debtors list could not be reconciled. As the internal auditor of Shelejuba dealers, you were asked to help with the reconciliation process. This is what is required in terms of the reconciliation. Maybe you can start by understanding what we mean by a debtor. A debtor basically means someone that owes us money as a business after selling goods to that person on credit. Remember, when we make sales, we can make sales on cash basis or credit basis. So when we sell our goods on credit basis, the person or business that we have sold goods to on credit becomes our debtor. So that is what we have. So remember, information on our debtors, whenever we sell goods on credit, we don't issue a receipt, but we issue an invoice. So the source document that we have when we sell goods on credit is an invoice, which is in opposite of when we sell goods on cash, we are supposed to produce a receipt as a source document. But in the case of credit sales, we have an invoice representing a source document, and this invoice is sent to the debtor, summarizing all the goods that we have sold to that person on credit. So this is what we have in terms of data. So when we have a data reconciliation, remember this information from the source documents, that is the invoice, is entered in the books of original entry or the journals. When it is entered there, it is it is then at the end of the period posted to what we call the debtors control. So what we have here, we have got a debtors control and the ledger account. So we are saying from the journals, entries are going to be posted to the ledgers. And when they are posted to the ledger, they are going to represent the list of balances of our debtors. And the total balances from the journals will be posted to the debtors control. So the balance that we are going to have in the debtors control should be the same with the balance that we are supposed to have in the debtors list representing the ledger accounts. So whenever there's a difference, that's when we require to prepare what you call a reconciliation. So a reconciliation basically is trying to match the balances between the debtors control, the debtors control account, and the balances that we are having in the list of balances of all the data that we have in the sales ledger. Then we compare with the balance of that we are having in the debtors control. Those balances should be the same, because the same information that is going to be posted in the debtors control is the same information that is also going to be posted to the ledgers. So those balances should be the same. When they are different, that's when we prepare a reconciliation to reconcile the two balances so that they become the same. So this is what we have. So on the first part of the question, that is 2.1, it requires you to prepare the correct debtors control account. Then 2.2, prepare the correct debtors list for June 2022. And then you go to 2.3, by making reference to transaction of number 1, mention one control measure that should be implemented by the business before they can grant credit to customers. So we are going to refer to note 1, and then we respond to this question. But we are going to start on the first part, which is to prepare the correct debtors control account. So this is the first question that we are going to look at. So this is our debtors control on the first part, which is 2.1. And we are seeing that we have got some figures that are already pre-entered in the answer book. So this is our representation of our answer book. So these figures are already entered and some details are also entered. So we are just going to enter missing information in this debtors control. So remember, we are going to start here on balance BD. So we are going to the question and try to identify what balance BD do we have. So if you go back to the question, let's try to see what balance BD do we have in the question. So we are going to start with our balance BD. We go to the question. to check exactly what balance are we having in that question. So we go up to check on the balances that we are having there. We are seeing that on this page, we do not have any information that is telling us about the balances. So we go back to the previous page to see what we have on that previous page. So if you go down on the information part, you remember we are given a general ledger of Cheletuba dealers, the debtors control. So you see that the balance BD that you're going to start with is this one, which is 26,920. This is balance BD that we have. So we are just going to enter that as it is, which is 26,920. So we can go back to our answer section. So we are here. So we are saying here we have got 26,920. 26,920. And then we check again in terms of, let's try to see in terms of sales, what are we supposed to enter. Remember, we also have additional information that we have to respond to according to the adjustments. Remember, we are given information here which is saying the following errors and omissions were discovered. So we can go down to check on the information. So what we are going to do is we are going to see which information is going to affect the sales there. We can try to see which information is is supposed to affect our sales. Let's go down and check exactly what we have. Right. If you go to item 3, let's try to see on item 3 here. I think the total of the sales column in the debtors journal was overstated by 4,420, while the total of debtors allowance column in the debtors allowance journal was understated by 560. So what does it mean? If this the sales figure in the debtors journal was overstated with 4,420, which means overstated means a higher figure was entered by 4,420. So to remove this difference, we have to subtract this 4,420 from the figure for sales that we are given there, so that we get the accurate figure for sales. So what we are going to do is we go there and subtract 4,420. We go there and subtract our 4,420. So we are here. We are saying 180,120. Then we subtract our 4,420. So this is what we have. So we are going to close here and put the final answer here. If we have got all the adjustments, we see what is being affected. And then we might have another adjustment that is affecting sales. So we can leave it like that. And then we are seeing that this is the third adjustment that we have. So we can go to the first one and then go through all the adjustments. And then after that, we can put our final figures. So on the first one, you'd see that it's saying Mr. Gumbi's account is to be written off as he cannot be traced. So what does it mean? When an account is written off, we know that this is a credit loss. This is a credit loss, or we can call it a bad debt. So we are saying this is a credit loss, or we can call it a bad debt. So what happens when an amount is been written off? It means remember, when you sell goods on credit, we create debtors. Those people that are owing us money that we sold goods to become our debtors. But when they are not able to pay due to many reasons, maybe the person has died, maybe the person has become bankrupt, maybe the person has gone out of the country that we cannot see that person. So we regard that person as a bad debt since we cannot recover our money. So we have to write that person off. So we have got any adjustment of that has to be written off of a bad debt that we have here, or a credit loss. So in terms of a credit loss, we are going and trying to see what's the balance that we have for M Gumbi. Because this statement is saying M Gumbi's account is to be written off as he cannot be traced. So it means we're going to go back and check the amount that M Gumbi is owing. That is the amount that has to be written off. So if we go back, you'd see that the balance are given here. So you got 9,580, 9,580 that has to be written off. So what does it mean? It means this 9,580 is a credit loss or a bad debt. So remember, when we sold those goods on credit, we debit the entry in the debtors control. Now we are writing off. It means we are removing it from the debit side of the debtors control. We go to the opposite side, which is the credit side, and enter it to remove it. So we come here on our answer section, and would see that these are the elements that we have on the credit side. So we've got discount allowed. You cannot include a bad debt there. debtors allowance is not part of bad debt. But if you see sundry credits, this is part of the bad debt. So we're going to include it here. And the amount that we have there is 2,500, so 9,508. So here it means we're going to add 9,508. So this is what we have. And remember, this amount also is going to affect our creditors list, because we are going to remove this on our creditor list. So we are going to go there as we adjust for creditor list, and then we subtract it from the balance that we're having for Kumbi, so that that balance goes to zero, since we are saying all the amount is going to be a bad debt. So we go back there and see the next adjustment. What are we supposed to do? So we come here. Item 2 is saying an EFT received from M. Langa for 3,000 rands was recorded correctly in the journal and general ledger, but was not posted to his personal account. So when we have such an error, what does it mean? So we can just maybe try to illustrate it, how it affects the accounts that are in question. Here we are saying this 3,000 was recorded correctly in the journal. So if it was recorded correctly in the journal, it means it's not going to affect the control account. So what happens is, remember, we have got the journal. We have got the journal here. Let's say this is our journal, and then our journal is like this. And then when we enter items in the journal, those items are going to be transferred to the debtors control. The total figures are going to be affected, are going to be transferred to the control account. And then the individual amounts, let's say here we've got 100 as first and 200 here second, which means the 100 is going specifically to be transferred to the ledger or the T accounts. So it means we're going to open our T accounts and enter these ones in each and every data. Let's say this is John's account. Let's say this John's account, which means we're going to enter it on the debit side, so that is a data. And we transfer again 200 separately, and then we enter to the name of the account of 200. But then for the control, we only take the total figure. That's the only figure that is we are transferring to what? To the control. So here the total figure is the only one that is going to transfer to control. But to the ledger or the list of balances, we are going to transfer individual accounts. So if you go back to our account, to our adjustment, which is saying an EFT received from Lana was recorded correctly in the journal and general ledger, but it was not posted to his personal account. So what does it mean? It means the account of Lana was not posted with 3,000. You understand? It was not posted with 3,000. So it means whenever a debtor makes a payment, we are supposed to reduce the amount that debtor is owing, because that person is paid part of the amount that he or she is owing. So it means that this 3,000 is only affecting the debtors list, but it's not affecting the control, since the statement is saying it was correctly in the journal. So what it means is our control is correct, since our figures that are going to be transferred to the control comes from the journal. Since our journal is correct, which means our control is also correct. But in terms of the ledgers, we are having a mistake there, whereby the 3,000 was not entered to show that there was a payment that was done. So it means we are going to subtract 3,000 from the account of M. Lang. And this transaction, you would see that this transaction is going to affect the list of the debtors list, and it's not going to be adjusted in the control account, since it's not going to affect the control account. So we can leave it at the moment. So we can say this one is affecting debtors list, so that when we come back on the debtors list, you can just pick it. Then we go to the next one. The total of the sales column in the debtors journal was overstated by 4,420, while the total of the debtors allowance column in the debtors allowance journal was understated by 3,560. So we have already adjusted for those 4,420. We have already adjusted it under sales. We subtracted 4,420. But this debtors allowance journal was understated by 560. So what does it mean? Remember, whenever we have got a debtors allowance, is going to reduce the amount of that debtor is going to pay. So it means this one was supposed to reduce the amount that that debtor is supposed to pay. And how we are going to adjust it, it means it's going to the opposite side. In the debtors control, we go to the credit side to enter it so that it reduces the balance that is on the debit side. So this is what we have. So our 560, we can go to the debtors control and see how we are going to enter it on the credit side. Our 560. So you'd see that our debtors allowances are here. So that's where we are going to put it. So we are going to say plus 560. So this is what we have there on the allowances. Then we go back to see what else do we have in terms of adjustments. So we go to item 4. So let's try to see in terms of item 4. Ex Maduna's invoice for goods sold to him for 2,220 was recorded collected but posted as a returned credit note in his account in the debtors ledger. So remember, this was recorded correctly but posted as a return in his account in the debtors ledger. So it means this mistake is only in the debtors ledger. So when a mistake is in the debtors ledger, it affects the debtors list. It's going to affect the debtors list. So what does it mean? It means it's not going to affect the control. It's only going to affect the debtors list. So on the debtors list, this was entered as a credit note, but it was supposed to be entered as a goods sold on credit. So what it means is it was subtracted. So we need to add it. So we are going to have a plus 2,220 times 2, because we have first of all we have to add to remove this one that was subtracted, and then we add again. You understand? So this is what we have. For example, what you are trying to say is for the data, this amount was supposed to be on the debit side, but was entered on the credit side as 2,220. So what we are supposed to do is, first of all, we put 2,220 and we remove this one, it becomes 0. When we say this one minus this one becomes 0, then we enter the correct amount, 2,220. So we are going to enter twice. So that's why we are saying times 2. So that's what we are going to do there. Then it's going to affect the debtors list. So here again, we have got debtors list. Then we go to the next one. Goods were sold on credit to Esmobo for 4,880. This was entered collected in the journal and general ledger, but was posted to his account as 4,080. You see that it is correct. As long as it is correct in the journal, it means the debtors control is not going to be affected. But if it's incorrect on the personal account, like this one, it's correct on the personal account, it means the debtors list is the one that is going to be affected. So we are going to leave the debtors control, but on the debtors list, we are seeing that we entered a smaller figure than what was supposed to be entered. So what we are going to do is we are just going to see the difference. There we entered a bigger figure, so we are saying 4,880, then we subtract 4,080 there and try to see what figure do we get. Let's try to calculate that one. We are saying 4,880, and then we subtract 4,080, and then we get 800. So it means here our answer, we have got 800. So this is 800. So it means we are going to add this 800 since we entered a smaller figure there on S Global. So this is what we have. So this also is going to affect the debtors list. So we can just refer back as we adjust for those for the debtors list. So we go there and see the number 6, charge S Global account 1,200 on overdue account. 1,200. So this one is an overdue account. It's going to increase the amount that S Global is owing. So it means it's going to affect both the debtors control and the debtors list. So whenever there's interest, it means the amount owing is going to increase. So on the debtors control, we are going to the debit side and enter it 1,200, and then on the debtors list, we are going to add to balance that S Global has by 1,200. So this is what we have. So we can go to the debtors control, since we are saying it also affects the debtors control. So this is debtors list again, but it's also affecting the debtors control. So we go to the debtors control, and we see that we have got the sundry debits. We have got an interest that is there that we are supposed to add there. So we are going to say plus 1,200. So this is what we have. So you see that these are some of the adjustments that we are supposed to make. Then we can try to see how we are going to adjust those. So you see that we have adjusted all the adjustments. If we come back here, you would see that this is the last adjustments that we have. on additional information, we no longer have anything here. So we can now balance our debtors control. So if we come here, you'd see that here we have got 118,120 now minus 4,420. Then we can close to see what answer are we getting there. On the sales part, we have got 113,700. So it means here we've got 113,700. Then here we are saying 4,440. Then we add 1,200. Then we are going to get 5,640. So we're saying 5,640. And that's what we have. Then you go to the credit side. On the first part there, we've got 70,000. It's not affected. So you're going to say 70,000. So you go to discount allowed. 3,308 again, there was no difference. There was nothing in terms of adjustments. So we're going to get enter 3,308. Then on this one, we've got an adjustment of 27,040 plus 560. We get 27,600. So we're going to say 27,600. Then here we are saying standard credits. We are saying 2,580 plus 9,580. And then we are going to get 12,160. So we are saying 12,160. This is what we have. Then obviously now we can balance our account. So we can just leave a line there and put our double lines and try to see which one is the bigger total. So when you're balancing, what you are supposed to do is you add the total of the credit and then you add the total of the debit. And then you find the difference. So if you add there, you'd see that the bigger total, remember the bigger total is the one that is supposed to come in between the double lines. And then the side that we have a smaller total is where we are going to have our balance CD. So what we are saying now, if you add the debit side, you'll see that that's the greater side. The bigger total is debit side. So it means that is the one that is going to come both in between, both sides in between the double lines. So the figure that you get by adding the debit total, we are going to get 146. Here 146,260. So this figure will come both sides in between the 146,260 in between the double lines, because this is the bigger total. It comes between. Then if you add now the total of the credit side, you see that it's smaller than the debit side. Then that's where we are going to have our balance BD. Sorry, our balance CD will come here. We have our balance CD. Then our CD will come here. This column. And then now we say 140,260 minus 12,160 minus 27,600 minus 3,380 minus 70,000. The answer that you are supposed to get there is 3,120. 3,120. So this is what we have. And then we obviously we are going to have a balance BD, the opposite side, which is here. We are going to say balance BD. On the below the double lines, then we enter the same figure here, which is 3,120. And remember, this is the beginning of the first day of the beginning period. So remember, this is June 1. Here we are seeing that it's June 1. So it means this at the end of June. Then the next day of the following month is 1 July. So here we are saying July 1. So this is what we have in terms of our debtors control. Then we now can go to our debtors list. We can check on our debtors list now, try to see how we are going to adjust that. So if you come here, you'd see that this is our debtors list. So on our debtors list, we have what adjustments that we have. We are going to pick those adjustments from the additional information that we have there. That's where we are indicating this is affecting debtors list. So the first one that is affecting a debtors list is this one. M. Gumbi's account is to be written off as he cannot be traced. So this one also we are supposed to indicate it is affecting our debtors list. So here, and we said the amount that we have for M. Gumbi is there. Is the one that is supposed to be written off. M. Gumbi 9,580. So on our debtors list, we're going to subtract again 9,580. As we are saying the whole amount is going to be a bad debt or a credit loss. So we come here, we say 9,580 there, and then we subtract again 9,580. So what does it mean? It means our balance is going to go to be 0. Then you go to the next adjustment on additional information. You are seeing that The next one is which is affecting debtors list here. We have indicated debtors list. So this one, which is saying an EFT receipt from Mlanga for 3,000 was recorded correctly in the journal and general ledger, but was not posted to this account. So this is an EFT, which is a payment which was supposed to reduce the amount that Mlanga is owing, but was not recorded. So we are going to subtract 3,000 from the balance of Mlanga. We have subtracted 3,000, so we go back there and we say Mlanga, we are supposed to subtract 3,000. So we cannot as yet close. We can just leave it at this, and then we close when we are making the final adjustments. So we go there. You see that the next one. Try to see. So we are here. So we are adjusting for 2. So the next one that is affecting the debtors list is item 4. Let's try to see what does it say. Item 4 is saying ex Maduna's invoice for goods sold to him for 2,220 was recorded correctly but posted as a return or credit note in his account in the debtors ledger. So we are saying this amount was entered the credit note, which was entered on the credit side instead of the debit. So we said we first of all have to enter 2,220 to remove it, and then we enter the correct amount, 2,220. So we're going to do it twice on the debit side. That's why we are saying 2,220 times 2. So when we if you calculate it like that, there 2,220 times 2, you're going to get 4,440. So this is the amount that we are going to enter on the debit side of the account of this person, which is ex Maduna. And when we are debiting a data, it means it's a plus, we are adding. But when we are crediting a data, that's when we are subtracting. So we come here, now we are saying plus 4,420 for Maduna. We are saying plus 4,440. 140. So this is what we have. Then we go again to see the next adjustment. What are we supposed to do? Like on the next adjustment, which is affecting debtors list, we have got item 5, which is saying goods were sold on credit to estimable for 4,808. This was entered correctly in the journal, in general ledger, but was posted to his account as 4,008. So that's, we calculated the difference and we found it's 800. So we entered a smaller figure on the debit side of estimable. So what are we supposed to do? We are supposed to add our 800 on the debit side. So this is simply as that. So here we are going to say estimable is here, then we add our 800. Then we go on to look at the next one there, which is the last one. So the last one is saying, let's try to see what the last one is saying. Charge estimable account, what does 200 interest on offer to? We said when there's an interest, we are increasing the amount that that person is owing. So it means we're going to estimables balance, then we add 1,200. So we go back there and we are saying on estimable again, we are going to add 1,200. So this was the last one. So we can close our brackets now since we've reached the last item of the adjustments. We have already adjusted for M&B. That is what we have adjusted so far. Then we can check on the other adjustments that we are supposed to adjust and calculate the final figure. So on the first part, when we say 7,620 minus 30,000, the amount that you are supposed to get here, we get 4,620. So here we've got 4,620. And then we have our 16,680 plus 800 plus 1,200. You are supposed to get 18,608. And then here is ex Maduna 5,380 plus 4,440. You're supposed to get 19,820. And then on the total, we are now adding 4,620 plus 18,780 plus 19,820. Then you get 33,120. So this is our total. So this is what we have in terms of these calculations. So this is what we have, guys, in this question of the debtors control account and the debtors list. Those who have been subscribed, please subscribe and share. We're still coming with more videos that are going to assist us. But as for this video, I'm signing out and we meet again.